Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this video because you're on my free email list and you got an email saying, hey, this video is up, and you click the link to watch it. Now, if you're not on that list, click the link associated with this video because you're going to get all my future updates throughout this new year that we're now in, because we're seeing some really interesting things happen with the financial markets this week. Commodities have taken off. The oil stocks have really taken off. And gold had a big surge on Monday, and so did the mining stocks. Although today, gold has given back most of those Monday gains. The mining stocks have pretty much held them. And some mining stocks that I looked at are actually up today, which is kind of interesting. But it is a wild boomerang this week for gold and silver. So what is going on? What is causing that? And what does it mean? These are the questions I asked Jordan Roy-Byrne to get his take on things. Jordan runs the website, thedailygold.com, and he's always got some interesting insights when it comes to the precious metals market. So I'm going to press this button right here so you can hear the discussion I had with Jordan Roy-Byrne. Well, hello. How you doing today, Jordan?
Hey, Mike, I'm great. How are you?
Good. It's been a while since we spoke, I think late in the summer, and gold pulled back into basically the election and had a jump and then came back down into December and really did well in the second half of December, and then completely came out of the gates on this Monday, the first trading day of the year. Gold closed above 1950. But then today, as we're speaking on Wednesday the 6th, gold is pulled back. It's trading around 1900. So a lot of people are worried now. Is this a false breakout? Because something similar to that happened in November after Election Day. Gold shot up, then shot back down. So people are very scared. And some emails I'm getting that it's all going to collapse, and I may be getting emails from people in Bitcoin saying sell gold, buy Bitcoin. What do you think is happening?
Well, gold, since it bottomed at the end of November, it's had a pretty good rebound. It rebounded back up to basically that peak in November, around 1960. It hit that overnight or early this morning. And, I mean, it's a key resistance level on the chart. Whether you look at the daily or the weekly chart. And we started out the year so strong. We had a big gap up, but yesterday I was thinking, we're probably going to see some selling in a reversal just because we had such a big gap up, and then 1960 is stiff resistance. So gold, the correction at the end of the year or after the summer, I mean, that is over. Gold had a good rebound here, but it ran into resistance. So now it's probably going to pull back, consolidate for a little while. And that's fine, Mike. But eventually, it might take a little bit of time. But eventually, if we see gold break above 1960, that is going to be in position to gain more momentum and challenge for a new high. So, this is nothing to worry about. This is, a good sell-off here, and I'm looking to make a few more buys, hopefully in the coming weeks, if we see gold continue to kind of correct and consolidate.
Yeah, January actually often becomes a good time to buy small cap mining stocks because a lot of times, some of them, not all of them, but ones that were trading weak into December will often get hit with tax loss selling that comes to an end on New Year's or before the end of the year, and then in January those stocks start to end up rallying and going up. And I'm actually seeing that today. I'm looking at my screen, and there's a couple stocks, I'm not going to name them, but they were flat in January. And even with gold down, there's one I'm looking at, it's up 10% today. So I think this is always actually a good month to look for new stocks and even private placements and so forth to get into. I think this is an important month.
Absolutely, yeah. I mean, as you noted, I mean there can be a lot of tax loss selling in a lot of names at the end of the year. And a couple months ago, I didn't place too much importance on tax loss selling, but then when I really thought about it, we had the huge run, we had the peak in early August. So anybody who bought around the peak, when things were pretty exciting for precious metals, they had lost money. And I'm just looking at the gold chart, and I'm not looking at individual juniors. But if you bought various juniors around that peak, I mean, you could have lost 20 or 30% by the end of the year. So there could have been some tax loss selling in a number of names, just given the way the market moved. In that there was a huge move in the spring and early summer, then there was a sell-off basically until December, and so that set up the potential for some tax loss selling. So yeah, January it tends to be a good month for gold, and also for a lot of these juniors that were weak leading into the end of the previous year.
Well, you posted an interesting article before the market opened on Monday, actually, about gold and silver. The title is "Will Gold and Silver Go Vertical in 2021?" And I'll link to it so people can, look at it themselves. But how do you answer that question, or what are your thoughts of what will happen this year?
Well, I think gold and silver are, I mean, the correction from the end of last year, as I said, it's over. But I think it's going to take some time for gold and silver to strengthen and then rally back to the August 2020 highs. And so I think if you look at gold, for example, if gold can break above 2100, which is just above the August peak, then it's in position for another vertical move. Silver is a little bit more difficult. I mean, if you look at the monthly or the quarterly charts for silver, I mean, there's a lot of resistance at 27, 28 where we are now, and then about 35. And also for silver, silver's all-time high quarterly close, I think, is 37 or 38. So that's a level to keep in mind. So I could see, I think the setup for gold is a lot cleaner, given that it just has to break above 2100. For silver, it's a little more difficult to kind of predict, just given that there's monthly and quarterly resistance here at 27 and 28, and then in the mid 30s. So I think silver is going to be a little bit more of a grind. But also what's important, Mike, is I had one chart in that update where I was looking at the gold stocks against gold, the gold stocks against the stock market, and then gold against the stock market. And if you look at those three ratios, Mike, going back 7-8 years, they're all trading in a base. And it looks to me like that base has potential to break out this year. And so if that happens, again, these are three different ratios, but if that happens, what that would mean is you see, number one, you see the accelerated performance in the gold stocks versus gold. So you would see the gold stocks performing much better than gold. And then another ratio was the gold stocks against the stock market. So then you would see the gold stocks strongly outperforming the stock market. And the last one is, I think, gold against the stock market, which has been the weakest of the ratios. But again, when we see those ratios start to break out from that 7-8 year resistance, that's going to tell me that the sector is in position for a vertical move. So in addition to just looking at the basic charts for gold and silver, I'm also looking at those ratios because those will give us a more precise signal on when the market is ripe for a vertical move or the start of a vertical move.
Well, they probably need to outperform the broad stock market in order to attract the small trader, the Robin Hood type of person, into mining stocks. Because as it stands now, I have access to the top 100 most owned stocks and ETFs on Robinhood, and still not a single one is a mining stock or a metals ETF. Not one. So the small players, the Robinhooders, have, as of now, zero interest in the sector.
Yeah, and that just, I mean, that in addition to looking at these charts, that's kind of a sentiment indicator, if you will, and that's very important because, Mike, if we were talking about this in the market with the metals markets were much, much higher. And then, multiple of the top 100 positions were GDX or Newmont or GDXJ or SLV or whatever. That would be more of an indicator that the average investor is already positioned in precious metals. But as you note, from the Robinhood data, they're not. I mean, let me guess. They're probably in things like Tesla and Bitcoin. That would be my guess. I mean,
Yeah,
you tell me.
Tesla's in the top 10 for sure.
What
And
about
Blink?
the Bitcoin?
Blink?
What about,
Yeah, I'm not sure. I can't remember if Bitcoin is on there or not.
yeah, so that just tells you that there is a lot of room for investors to position themselves in precious metals before you have to worry about the market getting overheated or sentiment getting a little bullish.
Yeah, we're a long ways from that. That's for sure. Well, as we wrap up, could you tell people what you provide on your website, thedailygold.com?
Sure, I provide a lot of free information, Mike. I post interviews like these. I usually do one per week. I also, once per week, I tend to produce, write an editorial. I also publish some video analysis. So there's a lot of free info that I provide on thedailygold.com. And at the top there, you can also opt in, get into my free newsletter, and I usually do one free update or one update in the weekly free newsletter, rather. So yeah, that's my focus. Go to thedailygold.com. There's a lot of great free info there.
Well, thanks for taking the time to talk to me and everyone else. We'll catch up again soon.
Okay, great. Thank you.